Look, if
Good
my security allows
afternoon.
that.
So
I am
Good
I do
trying to.
afternoon.
my
No, yeah, good afternoon and welcome to Justine Peterson. In Wow, I just got a brain. Justine Peterson welcomes you to their Lunch and Learn on Insurance 101. We wanted to welcome Michelle Perkins. Michelle, it's all on you now. Tell the people about yourself a little bit, and then we can jump right into it. And let me know when you would like to share your screens so I can share it. Okay.
Yes, absolutely. Okay. Remember, you're going to have to do the slides. You want to pull the deck up?
Yes. Would you like me to pull it up now? Just,
Uh,
just tell me when you're ready. I'm locked and loaded. I'm ready. I'm
okay.
all ready for you. Okay. So you can introduce
Perfect.
yourself, and then when you're ready, say cue the presentation.
Okay.
Okay.
Perfect.
All
First
right.
of all, good afternoon, everyone, and thank you to Justine Peterson and Miss Yolanda for having me on today to talk about a subject that is very important. But before we do that, hello, everyone. My name is Michelle Perkins. I am an ex-corporate America person. I don't know if that's the real title. I'm an entrepreneur, but I was asked to facilitate this insurance forum because my background is corporate America, banking and finance, and I've dealt with this a whole lot. And we wanted to bring you a perspective that wasn't a sales perspective, right? Because I'm not in insurance, so I don't have a dog in the fight. Whichever one you pick is okay with me. But we just want to make sure you have the right information. So it's some good information out there. We just want to make sure you have it. So currently, I'm an entrepreneur. I manage a couple of different businesses. I have an event planning company, a plumbing company, and we're in the works with something else right now. So I'm busy. And all thanks to Justine Peterson. So they have been truly a partner in my entrepreneurship journey. So with that being said, we'll just go right ahead and jump right in, Yolanda. And for some reason, Yolanda, you're muted. I can't hear you.
I muted it so I
Oh,
wouldn't interfere with your
gotcha.
thing. So where's my
Okay.
my screen? There we go. See. I don't know what Zoom's doing today, but it's doing its own thing. Oh, there we go.
It's cold. It's getting cold outside. So it's,
I love this time. This is my favorite time of year. Yes, it is.
yes, me too. Me too. Okay, guys. So without further ado, we're going to talk a little bit about understanding homeowners insurance, what you need to know before and after a disaster, right? So this lunch and learn is truly going to be a lunch and learn. Shouldn't be that long. If you have any questions, you can just um, jump right in and ask since there's such a small amount of us, or if you want to hold your questions to the end, that's okay too, but I'll go right ahead and get started. Okay, next slide. So I told you guys a little bit about myself earlier. Can you hear me, Yolanda? Oh, there it is. Okay. um, I do have a master's degree in business from Webster University, a bachelor's in communications from UMSL, 25 plus years in banking and finance, and again, entrepreneur, managing multiple businesses in the St. Louis area. What I'm most proud about is I am a mom of four, and I have one grandson, and yes, he is spoiled, as all grandchildren should be, right? And I really believe that knowledge is power, especially when it comes to protecting our homes and families. So, in this presentation, I'm going to give you some insurance information, but at the end, I have a few gems that I'm going to drop, some honorable mentions, okay, that everybody should know. Okay, so next slide. Okay, so why are we doing this, right? Why does this matter? So after the recent tornado caused over $1 billion in damage, many families realized they didn't fully understand what their homeowners insurance covered. So today's goal is to empower you with the knowledge to make informed insurance decisions before and after disaster strikes. Now, I personally was in a part of the tornado. So everybody remembers the tornado in May, but when I say I was a part of the 314, they go, "What? There were 9 tornadoes on 314 day here in St. Louis." And one of them hit the North County area. I'm from Florissant, really bad. And we're still recovering from that. So we had 2 major tornado systems in our area in 1 year. So I think that's really kind of unprecedented. But I personally, had half my house blown off and windows. Like when I tell you major damage, to the tune of probably almost $100,000. Thank God, I knew a little bit about insurance and I had the right things in place. Otherwise, it wouldn't be pretty. So I had a gazebo in the back that ended up in my neighbor's roof, on my neighbor's roof. So it was a really bad tornado. Luckily, I don't think anyone was killed, but lots and lots of damage. So we're just gonna get right into it. Okay, next slide. Okay, so what exactly is homeowners insurance? What does it really cover, and what doesn't it cover? Right? Because what it doesn't cover is as important as what it does cover. So it does cover the actual structure of your home, which is the walls, roof, floors, your personal belongings inside your home, additional living expenses if you can't stay in your home, which is really important, right? Because now I'm watching the news and there are so many people who were a part of the May tornado who are displaced because their insurance companies aren't doing what they're supposed to do, or either they did not have the right coverage and now they're displaced. But it also covers liability protection if someone is injured on your property. And a lot of people don't know that. What home insurance doesn't cover, you might be surprised. How about flooding? If there's a flood, it is not going to cover flood unless you have separate flood insurance. Earthquakes, nope. Sewer backups, nope. Now you can add these as riders. So you can tell your insurance person, hey, I put something in here that if the sewer backup, those are called riders, and you can add that. Also, neglect or wear and tear will not be covered. Okay, next slide.
What do you mean by neglect, wear, and tear?
Yeah, so say something happens in your home, and it was because of your negligence. I'll give you a true life example. So this person had a water heater. So water heaters, you own a home. There are certain maintenance and things that you have to do, right? So then a water heater was getting old. I mean, oh, it started leaking, it was leaking into their little sewer drain. So not a big deal, right? So it's leaking, they don't care. The water heater ended up really busting at the seams. Water was everywhere, damaged, like some flooring. They had some music equipment or something down there. Insurance would not cover it because they said, had you been doing the proper maintenance on this water heater, if you were doing what you were supposed to do, this would have never happened. I know, I know. So you have to be really careful. So neglect and wear and tear will not be covered. Okay. Okay. Next slide. And I know I'm whipping through these pretty fast. Um, but if
Now,
you
key insurance terms, do I need to go back one?
no, 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 no.
Okay.
No, this is the right slide. Slide 5. Okay. Key insurance terms made simple. So when they talk about your premium, what they're actually saying is this is how much you pay each month or each year for coverage. I try to pay my insurance on a yearly basis. Typically, if you have a mortgage on your home, then the insurance should be escrowed. Sometimes certain mortgagors will allow you to escrow and pay your own homeowner's insurance and your taxes. You may have heard the term taxes and insurance, but your premium typically is escrowed, and your mortgage person pays that insurance on a yearly basis. If you are one of the lucky people who can pay your own, and I say lucky because all the insurance companies do is the mortgage companies is hold your money, collect the interest off of it, and pay. Well, I can hold my own money, right? Collect my own interest and pay my own bill. So, in either case, the premium is what you're going to pay each month. You typically will get a better deal if you pay it on a yearly basis. Now, when we talk about deductible, what we're saying is this is what you pay out of pocket before your insurance actually kicks in, right? So, a typical deductible on a home is, anywhere from $5 to $2,000. So that means the first up to, let's take say for example, it's $2,000. Okay, so with a $2,000 deductible, if you have $1,700 worth of damages, then you're not going to really get anything from the insurance company, right? So that would be a claim we wouldn't even file because you don't even need that to go against your insurance. So the deductible is what you're going to pay before the insurance kicks in. In this same example, you have $10,000 worth of damage. That means that the insurance company will only cut you a check for $8,000 because the first $2,000 is going to be on you. Make sense? Okay.
Yes.
Okay, perfect. Policy limit. Now, you have to be really careful with policy limit. Now, this is the maximum amount your insurance will pay for a covered loss, period, no matter what. So they may say, you know what? I know that you have $200,000 in total loss on this property, but unfortunately, your policy limit is 75,000. How terrible is that,
Um,
right?
very, very terrible.
It happens all the time. This is what we call being underinsured, right? So you have insurance, but you don't really have enough insurance. To rebuild your actual home, it may be a $500,000, but now you only have a check for 75,000. So policy limits are very important. You need to pay close attention to that. And lastly, exclusions. So these are items that just regardless are not going to be covered, right? So that you may have an exclusion for jewelry. Oh, no jewelry is included. Typically, jewelry is included in a home insurance policy, even if you lose your jewelry out somewhere. That can be covered, but you gotta pay attention. You gotta read the small print, and you have to know what to ask for. Okay, next slide. Okay, actual cash value versus replacement cost. Huh, this is a big one, and this is a really good one, guys. Actual cash value, what they also call ACV, pays what the item is worth today minus depreciation. For instance, you have a shirt, right? The shirt is it's $100. It's $100 shirt. Let's say it's a fancy shirt. I don't know, Gucci, pick one, right? You paid $100 for it. It's a beautiful shirt, mint condition, nothing's wrong with it. Fire happens, it burns up, and you have an ACV policy, right? So you go and you say, okay, I had this beautiful Louis Vuitton shirt. I paid $100. I think that's probably way too low if it was Louis Vuitton, but you get the.
Yes.
So I have this beautiful shirt. It was $100, and they go, "Oh, okay, great. Well, when did you buy it?" And you say, "Well, I bought it 10 years ago, but they don't even make it anymore. I can't even get it. It was perfect. They're gonna say, oh, okay, well, the actual life cycle of a shirt is about 10 years. So that means every year your shirt was worth $10,
Less.
right? So now that it's been 10 years, it's only worth $10. So your $100 shirt that you paid for 10 years ago at $100 costs you today, let's say you found one and it's $500 to replace it, you're going to get a check for it for 10 bucks because actual cash value pays what the item is worth today. And the insurance companies, they have their own depreciation tables. You can even ask for this in advance. What is the depreciation table for my household goods or clothing or whatever it is? And you'll see they're going to discount it based on the average life cycle of it. Like, who keeps shirts forever? Nobody. So you were going to probably get rid of it this year because typically shirts only last 10 years. Now this is just an example, but you see where I'm
Right.
going with this, right?
Yes.
Okay, as opposed to replacement cost value. So replacement cost value pays what it costs to replace the item with a new one. So which one do we want, guys? We want
We want
replacement cost.
replacement. Replacement cost value.
Yes, we want replacement costs because they're going to say, okay, you had this shirt. Okay, you paid 100 for it. Let's go out to Louis Vuitton today. Oh, it's $980. Here's a check for $980. Huge
Good.
difference. And you know what's crazy about it is a lot of times it's not a huge difference in your premium to go from an ACV to replacement costs. So it may be $500 for the whole year, but think about the difference that would make. You know what I mean? If something really
Yeah.
happened. Okay. So I also give you an example down there. Your 10-year-old roof costs 10,000, new but has depreciated by 50%. They're only going to give you $5,000 if you have an actual cash value policy, as opposed to the replacement cost value policy where they would give you the entire $10,000. Make sense?
Makes sense.
Yes, good stuff to know, right?
Yes, thank you.
Okay, next slide.
All right, we're there.
Okay, so we talked a little bit about exclusions. We talked about flood and earthquake require separate policies, but also things that you don't really think about, like mold, rot, pest damage. None of that. People have their entire homes demolished by termites and things like that, and you think, oh, my house is falling apart. It's breaking down. Blah blah blah, and it's termites. Guess what? No, that will not be covered. You will be out of the cost of paying for that yourself. So again, there may be a rider that you can add to your insurance to cover this, but it is not customary for it to be a part of basic homeowners insurance. Intentional damage. Okay, somebody is, having a bad day and go around the house and putting holes in the wall and they having a fit, or there's a fight breaks out, anything like that, and people are no, not for the most part, it's not covered. It falls under intentional damage. So you have to be really careful with things like that. And again,
Wow.
maintenance issues or neglect. If you're not taking care of things, you're not taking care of your property, your items, whatever, and you want it to be covered, you may have a really hard time getting those items covered. So you want to make sure you're doing your maintenance and everything that you're supposed to do to your home. Okay, next slide. Okay, now how to choose the right policy for you. You want to compare several quotes, not just prices, but coverage details. This is the beauty of someone like me putting on an insurance info lunch and learn for you, right? Because I'm not saying, oh, come over here, choose this insurance. It's the best. No, I'm not. I don't have an insurance company. I don't do insurance. I have the information, but you have to be able to compare things for yourself. So you want to compare the quotes. You want to compare different companies, and just really make sure you're paying attention to the details. Okay, that ACV versus RCV, all of the little stuff. What's not covered, and trust me when I tell you, the insurance company you choose is just as important as the policy that you choose, right? So make sure you're with a credible company that's going to show up for you when disaster happens. You want to make sure that your policy covers rebuildable costs, not just market value. So if your house burns down, a tornado comes, like we had, right? The tornado comes and the house is no longer there and it has to be rebuilt. You want to make sure that you have a policy that takes into account the value today of what it's going to cost to replace your home today. You want to ask about local risk like wind or hail. We talked a little bit earlier about flood insurance, right? Well, the majority of the areas here in the St. Louis metropolitan area, we're not in what's called a flood zone. So flood insurance isn't required. Um, Earthquake insurance isn't required. But could there be an earthquake? Absolutely. Could there be, these other things happening? Absolutely. So you may just want to, just ask how much it is. Oftentimes, again, it's not as expensive as you may think it is. It could be a couple extra $100, and now you're fully covered. You also want to choose replacement costs, of course, again, if you can afford it. And again, the difference in between the actual cash and replacement costs typically isn't a lot. So pay close attention to that. Okay. All right. Understanding riders and extra coverage. So we talked a little bit about adding on a rider earlier, but you can do those for things like jewelry, electronics, or collectibles. Some people have, these fancy, expensive paintings and things like that. These are considered special coverage items, and you can talk to your insurance person about having a rider to include those in your insurance. Add-ons can cover flood, sewer backup, home-based businesses. So I have to have certain insurance because I run my business out of my home. I have a home-based business, so I have to do things a little bit differently. Make sure you're asking those questions. You also want to ask your agent to review optional riders based on your needs. So having a really thorough, in-depth conversation with an insurance agency is well worth it. Okay, next slide. Tips to keep premiums affordable. Okay, you all, we've heard Flo a million times on those Progressive commercials, right? Bundle your home and auto. Guess what? Flo is correct. If you bundle, and not just with Progressive, with any insurance company, typically you're gonna get some discounts for having multiple policies with one company. Okay, you want to increase your deductible, but only if you have the savings to cover it, right? So I'll have to do a whole nother savings lunch and learn for folks.
Yes, okay.
Yes, but the key to remember, you want at least 6 months worth of what it takes to run your life in a monthly basis. You need 6 months of that in a savings account, right? So that's, to me, that's totally separate. I call that my emergency savings. But then you can have another little savings account where I put like things for my deductible, if my car breaks down, if all those other little expenses, that goes in a separate account. So if you have something like that, then go ahead and increase your deductible to $2,000 or $3,000. It's going to make your premium come way down, and you have that little deductible in case something drastic happens. You want to also install safety features like alarms, storm shutters, There are all kind of AI devices and things that you can use so that it forewarns you. You know, you can have the type of fire alarms where you're not even home, but if your fire alarm goes off, you get a text, you get a call, you get some kind of ding to let you know, therefore mitigating the amount of damage that can be had, right? Or maybe you can get there fast enough to, you know, send a neighbor or something. But there are things that you can use, safety features out there that can help. Same thing with water, with glass breaking. There are things that here that sends an alarm so much. So make sure you go out. I'm a big fond user of Chat GPT. I know people love it, but they're like, oh, it's terrible for the environment. I don't know about that, but use your resources like that. Google. There's lots of information at the library as well. Okay, another thing very important, which I remember being younger and having conversations with the agents about credit and how it affects your rate. But if you don't have the best credit, you're not going to get the best rates. So make sure you're maintaining a good credit record because it does affect what you pay. Next slide. Okay, so we kind of talked about the pre, right? So what
Right.
happens? What do we need to do before it happens? So now the disaster has happened. What are some of the first steps you should do? So first of all, you want to make sure your family and everyone is safe first, right? Really quick story. So my sister is one of these high level folks in the military. So she was actually in the Pentagon during 9/11.
Oh, wow.
She was in the Pentagon. She's Air Force, so it didn't hit the Air Force side. It hit like I think it was the Navy or Army side or whatever. But during that time in DC and a lot of America, the phone lines. I don't know if you all remember, but if you had someone who lived in the DC, Maryland, Virginia area or New York, you were not getting through on the lines, right? So, what are
Right.
some of the safety things that you can do as a family to say, okay, I'm gonna post on Facebook if I can do that. You know what I mean? Just something to where your family, you all have a plan. What happens if this happens and we can't get in contact? What is a meeting place? So I'm really big on meeting places because these phones, during a disaster, you're not going to have those. So is your family going to know, okay, something happened, we can't get in touch with anybody, we're meeting at the corner of Kings Highway and Natural Bridge. That's where our family is meeting. Get there. We're going to wait till you get, you know what I mean? Have
Yeah.
a plan. Okay. Make sure your family is safe. Then you want to make sure you're preventing further damage if possible. So the roof blew off, get somebody over there right away with a tarp that can cover the roof so that water isn't just flooding into your home. Do whatever you need to do, board up a window, that you can and that it's safe to do. So you want to make sure you're doing that. Contact your insurance company immediately. Um, when I was a part of the 314, I immediately got my insurance company on the phone and they were there in like the next 24, 48 hours. I think I had a check in 3 days. They were already starting to, like pay and get things going. So you want to make sure you're contacting your insurance company immediately and try not to move things. You want to take pictures, videos. Sometimes you have to move things because they're in the way or, they could cause further damage or someone could get hurt. But you want to take really good pictures, really good videos. You're going to need that to show to the insurance agent. Number four, you want to keep a record of every call, email, and receipt. Everything, right? Don't throw it away. Keep everything until everything is all said and done. Okay, next slide. Documenting damage, what to do immediately. You want to take photos and videos. We talked about that of every damaged area. You want to make a detailed list of damaged or lost items. Really, guys, you want to do this beforehand. So you should have kind of a house inventory. Oh, I have these many TVs, they're this, they're that, a stereo, bedroom set, blah, blah, blah. You kind of, and it seems kind of crazy to think about, but I'm telling you, when disaster strikes and there is no home, there is nothing, then now you got to go back and remember, oh, okay, but did I have how many of those? So it's really good to kind of document things beforehand, if you can. But make that detailed list of damaged or lost items. Keep receipts for temporary housing or repairs. Anything has that you've been affected by because of the disaster, keep those receipts. Oftentimes, the insurance companies would reimburse you for those. Do not throw away damaged items until they're inspected. So you may need to move them out the way, or if glass breaks, you may need to move things, but you don't necessarily have to throw it away and get rid of them. So you might want to just try to hold on to what you can and don't throw away damaged items. Okay? All right, next slide. Filing a claim, what to expect. So first of all, the adjuster visits to inspect the damage. You'll receive an estimate of covered losses. You want to keep the communication polite but firm. So in my instance, right, the 314 tornado, the insurance guy came. He's seeing all the damage. Okay, this and that. I had a patio table, with the umbrella, right? So I like nice things, right? So he went on Amazon, found an umbrella. It was like $79. I had an umbrella I paid $899 for. I don't want a $79 umbrella. I want the fancy big umbrella that tilts and folds and does all of this stuff. Luckily, I had just bought it last year, pulled it right up on my Costco receipt, sent it over to him, and that $79 turned into my $899 for the what I actually purchased. So, you may get some of these because of, they're not trying to pay you at $900 for that, but that's what I paid for. And because I have what? Replacement cost value, they couldn't give me anything but what I paid for or what it costs to pay for it today. Because actually it was $899, but I got it on sale for like $699. But it's not on sale now. It was $899, so they had to give me my $899. Okay, so keep that in mind. Also, if you disagree, you can request an reinspection or an independent appraisal. So if those numbers aren't looking right, I paid this or that or whatever the instance is, then you can go back and say, listen, I respectfully request someone to come back out. Let's talk about this. But their answer does not have to be the end all. Okay? You do have rights. Okay, next slide. Avoiding delays and denials. Again, report your claim promptly, be organized, keep all the paperwork, understand your policy before you sign off on it and purchase it, and don't start any major repairs until approved unless necessary for safety. Okay? Because I've known people kind of getting in the middle of it. They started, they're paying folks, and then the insurance company didn't even cover it. So you might just want to slow down a little bit, step one, step two, step three, and kind of get an approval before you start spending money and, scheduling repairs. Next slide. All right. Lessons learned, real life stories. So we talked a little bit about that already. Um, but just so you know, families with replacement cost policies, they rebuild faster. Of course they do. They have more money to do it, right? That just makes sense. Those without flood coverage face longer recovery times. Keeping receipts and documentation made a huge difference. Knowing your coverage ahead of time reduces stress. I even though the tornado happened for me, I was happy everybody was okay. But was I really stressed out about everything? No, because I know I have good insurance. I know I had good insurance. I picked a good insurance company and I knew everything was going to be all good. So it really, really helped in that stress level. Okay, next slide. Your homeowner's insurance readiness checklist. Do you know your deductible? Is your coverage replacement cost or actual cash value? Do I have flood or earthquake coverage if needed? Have I updated my policy in the last year? Do I have an inventory of my belongings? Again, all good things to know. All right, next slide. So, resources and local support. The Missouri Department of Insurance, insurance.mo.gov, is a wonderful place to start. We also have the FEMA Disaster Assistance, disasterassistance.gov. There are local nonprofits offering recovery and aid, like Urban League. There was a lot of different organizations, Red Cross, out here helping people. And I think you can call 211 for those. If you dial 211, then they can connect you to local resources. You also want to talk with a licensed insurance agent for personalized advice. Okay, next slide. Okay, these were a couple of my little honorable mentions that I said I was going to put at the end. So, although this doesn't have to do with a disaster, these things can be disastrous in your life. So, just some food for thought. If you're financing a vehicle, consider gap insurance. I'll say gap insurance to people and they'll act like they have no idea what I'm talking about. But gap insurance actually covers the amount of the car. So say you have a total loss, right? You owe a car, you're paying a car note, you pay $20,000 for it. Today it's only worth 15, and the insurance company is only and you still owe 15, or you still owe, the difference. That gap insurance will pay the difference. So if you owe 20, but it's only worth 15, but you still owe almost 20, then that gap insurance will cover that 5,000 difference. Okay. Roadside assistance, like a AAA, or even adding that into your auto insurance. Usually it's really cheap, but it comes in so handy and saves you money if there's an issue. Okay, when comparing rates, be sure to compare apples to apples. So make sure you're comparing um, the same amount of coverage to the same amount of coverage at different companies. Okay. If your vehicle is older, assess if you still need full coverage. A lot of times we're paying extra insurance for full coverage, and if something happens to your car, you're only going to get a small amount of money, so it didn't really make sense to have it. Okay? All right, next slide. Go back one slide. One slide. Okay, other honorable mentions. I'm not sure if you use apps like Rakuten and Upside. They save so much money. I'm not affiliated with any of them, and I collect hundreds of dollars a year from these people. So go to Rakuten before you make a purchase. If you click on the link through Rakuten, you get money. It's really just that simple. Upside, when you get gas, go to the grocery store, you get money back just for using the app. So really cool things out there. Sometimes we think, oh, it can't be true. It really is, because I personally have used them and get hundreds of dollars a year from them. We talked a little bit about roadside assistance, and then beneficiary deeds. If you own a home, please, please, please make sure you have a beneficiary deed. So I live in St. Louis County, right? So my house, and from being a banker, I managed many a banking centers at different various banks, and I promise you, there was always people in my office crying because now they're going through probate, grandma passed, and the house, nobody can, get it, or she didn't leave it to anyone. A beneficiary deed in St. Louis County is $40. The paperwork to do it is at the library for free. For free. The notary is at the library for free. You download the paperwork. It says, if I was to pass away, please give my house to Barbara Jones, my daughter. That's it. It's done. If something happens, that house immediately transfers into that beneficiary's name. Now, that has nothing to do with the mortgage or if you still owe money, any of that. What it does do is it assigns that to someone else, and it doesn't go to St. Louis County or St. Louis City. This is called a beneficiary deed, guys. Google it. I'm going to leave my email if you have questions. This is so important, makes such a big difference. And it's $40. I know in St. Louis County it's $40. It immediately transfers the deed over. So if you have kids, you want to leave your house and nobody is on that deed but you, go to the library, get that paperwork, have them notarize it, pop it in the mail, you're done. Okay? Okay. Also, my last little honorable mention is make large purchases online. So I recently bought a new couch, right? I went into the place and the couch was X amount of dollars. Let's say the taxes on the couch, because I'm in St. Anne at Value City Furniture, the taxes for St. Anne and then Missouri, all of that was like 800, no, 600 and some dollars, right? For taxes. I went online, bought the couch online, $200 in taxes. Because I don't have to pay St. Anne. I promise you, go online, try to make the purchase online. And oh, by the way, I clicked my Rakuten and I got 2% back for buying it online and clicking their link. There are so many ways that you can save money and just have a better life if you know things, right? I'm full of information. So I hope those tidbits help you. Okay, last slide. You guys, it was so wonderful presenting this for you. I'm not certain if anyone has it. Actually, does anyone have any questions first? Any questions about anything I spoke about?
This was really good information, Michelle. Oh my goodness. It's just it's the little things that you don't know that someone informs you of that make a whole lot of difference in the end. So I really appreciate that. But I'm going to sign up for Rakuten right now.
Oh, you know what? Let me send you the link. I get money and
Thank
you get
Well,
money.
send it to me. Send it to me. I'll give you my number offline. So my personal number
Yes.
offline. All right.
Yes, I will do that because I get money and you get money. It's really that simple. Simple. It's about marketing. So they just want to know where people are shopping and what they're doing. I'll take
Mhm.
3% back for that. For
Oh,
that
absolutely.
Value City, I end up getting like $160. $160 from clicking the link. I promise y'all, I can't make this up.
We might have to bring you back and then talk about this because this works. Would this work with people who have businesses if they're purchasing things for their business?
It doesn't matter. It doesn't matter what you
Just
all.
whatever you. Oh yeah, we'll have to talk offline. We'll get it back to insurance. But thank you for the for teaching us the ACV and the RCV. That's a game changer. And then what to do, like when something happens, what to do. And I don't, I don't want to say this, but we know that the last tornado is probably not the last disaster that we'll see in our lifetimes. And it's better to be informed and prepared. And this has changed my, whole
Perspective, yeah.
outlook on. Yes, like it's the little things. You're like, well, I'm insured. And then my house is worth 100,000, so I'm insured up to 100,000. But that's not the replacement cost of my house. So
I,
these are the things that you're not even thinking of. So this has been eye opening, and I really appreciate you. Does anyone else have any questions, Joseph, Andrew, about insurance?
okay, Joseph said thank you. I see his. Thank you for being here.
Yeah,
Okay, well, thank you
thank
guys
you.
again for taking time to learn about protecting your home and your family. Your knowledge today can make recovery easier tomorrow. If anyone needs to contact me, you can reach me at youreventsdiva@gmail.com. All
This
right.
was amazing. Thank you, Michelle. You have an
Thank
awesome,
you.
amazing day. And we got to get together. We need to have another lunch and learn. You have too much information that we need to get out here. Have an
Yes.
amazing day, and
Thank,
I'll connect with you as soon as we're offline. Okay.
okay. Thank you. Likewise.
You're
Take care,
welcome.
everyone.
Bye bye. All right, I'm gonna stop the share. All right, I'm gonna end it.